Welcome back to Investing Talk Podcast. Today, we're sharpening our focus on an upcoming earnings report for a truly iconic name found in almost every pantry, Campbell's Co. We've gathered the latest pre-earnings analysis and insights. The idea is to give you a comprehensive understanding of what to expect, cutting through the noise so you can be well-informed quickly. Our mission today is really to sift through the numbers, unpack the market sentiment, provide you with a clear picture of Campbell's heading into their next report.
That's right. We'll be scrutinizing their historical performance, digging into the current market context, and laying out potential scenarios. And it's all derived directly from the most recent analyses available to us. It's about connecting the dots, not just listing them.
Absolutely. Before we really jump into the soup, so to speak, if you find this exploration valuable, please consider subscribing, liking, and maybe leaving a comment. Your support truly helps us keep these analyses going. And if you'd like to help us out even more, you could always consider buying us a coffee. The link's below. Plus, if there's a specific company you'd like us to look into next, just let us know in the comments. We're always keen to hear what's on your mind. All right, let's open the can on this. Campbell's Co., they're expected to report earnings. When exactly?
The expectation is before market open on September 4th, 2025.
September 4th. Okay.
Though, some sources do give a slightly wider window, maybe anywhere from August 28th to September 4th.
Got it. So late August, early September timeframe.
Exactly. What's immediately interesting here is the analyst consensus.
Okay, what are they saying?
They're projecting earnings per share of $0.56.
56 cents. And revenue.
Well, specific consensus estimates for this quarter aren't as widely publicized. But we do know their last reported revenue was $2.48 billion. And the projection for this current quarter is actually for a year-over-year decrease.
A decrease. Okay, that's definitely something to watch. That's significant, isn't it?
It is. It sets a certain tone.
Definitely. And speaking of expectations, is there any kind of whisper number floating around, that unofficial higher bar?
Good question. For Campbell's this time, no, not really. No significant whisper number making the rounds.
Which sometimes tells you something in itself, right?
It can. Maybe it suggests general alignment with the public consensus, or perhaps just like lack of strong conviction either way from the bigger players.
Okay. What about their own guidance? Did Campbell's give us any specific numbers last quarter?
They didn't give explicit numeric guidance, no. However, they did mention expectations for mid-single-digit revenue growth overall. But crucially, they also highlighted ongoing margin pressures.
Ah, the margin story.
Yes, especially from escalating commodity costs, which really raises the key question for this quarter.
How well have they managed that?
Exactly. How successfully have they navigated those persistent cost pressures? And did the pricing actions they took actually stick without hurting volume too much?
That's the balancing act for every food company right now, isn't it?
Yeah.
So looking back a bit, how's their track record? Does Campbell's usually surprise on earnings? Do they tend to beat or miss?
Well, if you look at the recent trend, they've actually established a pattern of small positive surprises.
Oh, really?
Yeah. For example, Q3 2025, they reported $0.73 EPS. The estimate was $0.65. So a decent beat there.
Okay.
And going back further, Q1 and Q4 of 2024, they generally matched or slightly exceeded consensus. So there's a tendency to, meet or slightly beat the bar.
That's good for consistency.
Mm-hmm.
But what about the stock price after the report? This is often where the real action is. Or maybe not for Campbell's. Do those beats actually move the needle much?
Yeah, that's what's fascinating and maybe a bit counterintuitive. The market reaction post-earnings for Campbell's has been consistently quite muted.
Muted. How muted are we talking?
We're talking modest changes, typically within plus or minus 3% in the session right after earnings.
Only 3%. Well,
yeah. And often, even that small initial reaction tends to fade during the day. The stock often ends up reverting close to pre-earnings levels by the end of the week.
So it suggests the market isn't easily surprised, even by a beat. It's almost like it's already priced in.
Now, that seems to be the case. Like, the market expects that steady, reliable, but maybe unexciting performance.
So steady Eddie, not a growth rocket.
Yeah.
Got it. What about the underlying financials then? Forget the surprises for a moment. Are revenues actually growing consistently? And how are those margins holding up under all this pressure?
Steady Eddie's a pretty good description. Key metric trends show modest year-over-year revenue growth, like Q3 2025 saw a 4.5% increase, which, for a mature company like Campbell's is respectable. However, margins and operating income have consistently faced significant pressure. inflation, rising commodity costs.
Usual suspects.
Exactly. Everything from wheat and tomatoes to packaging, logistics, labor. Their pricing actions have definitely helped offset some of that, but it remains a persistent challenge. It's a big factor in their profitability picture.
Makes perfect sense given the macro environment. Okay, moving beyond the numbers for a sec, what's been happening operationally? Any major announcements, new products, big strategic shifts during this specific quarter we should know about?
You know, surprisingly, or maybe not so surprisingly given that focus on costs, there have been limited major product launches or acquisitions announced during the quarter.
Really, so more internally focused.
Very much so. The real focus seems to have been on ongoing announcements about cost management and efforts to optimize supply chain efficiency. They seem to be really hunkering down.
Controlling what they can control in a tough environment.
Precisely.
Can you give us a bit more flavor on those efforts? What does cost management and supply chain optimization actually look like for them?
Sure, it's a mix of things. It involves, tough negotiations with suppliers, trying to lock in better prices, but also things like optimizing how they use their manufacturing plants, improving their demand forecasting to cut down on waste.
Thought planning.
Right, and streamlining their distribution networks. They're also investing in technology for better visibility across the whole supply chain. The goal here is really to mitigate that margin erosion we talked about. It's a defensive strategy in the face of rising costs.
So it's more about protecting profitability than driving huge growth spurts right now.
That seems to be the priority, yes.
Okay. Given that defensive stance, how's the broader consumer staples sector performing? What's the context?
Well, the sector as a whole has been relatively resilient. Staples are things people need, right? Food, household goods.
Seen as safer havens.
Generally, yes. But food companies specifically are still facing those persistent headwinds. Input costs, wage inflation. Plus, some of that pandemic boost, where everyone ate at home more, is starting to fade a bit.
Right, normalization.
Yeah. And while grocery traffic is stable, we are seeing a bit more price competition, especially from private labels.
Ah, the store brands.
Yeah.
That can definitely pressure established brands like Campbell's.
It certainly can. It's another factor squeezing those margins.
So what are the analysts making of all this? Are they generally bullish, bearish, or just neutral?
Overwhelmingly, analysts maintain a hold or neutral rating on Campbell's.
No major upgrades then.
Haven't seen any notable ones recently. If anything, we've seen some.
Okay, let's shift to the stock itself. How has it actually been trading leading up to this report? Any interesting patterns?
Honestly, it's been pretty quiet. The shares have been largely range-bound. Not a lot of volatility.
What's the price level, roughly?
Currently trading around $32.10. And there's been very little directional bias since the last report.
So the market's kind of in a holding pattern, waiting for the numbers.
Seems that way. It aligns with that neutral analyst sentiment we just discussed.
And what about the options market? What are the traders betting on? Are they expecting a big swing?
The options market is pricing in an approximate move of plus or minus 4% for the earnings release.
Plus or minus 4%.
Yeah, which is pretty much bang in line with their recent actual post-earnings moves.
So no expectation of a huge surprise then.
Doesn't seem like it. And there hasn't been a big skew in open interest or volume towards calls or puts either. Suggests a balanced outlook, no strong directional bets being placed in size.
Again, reinforcing that predictability the market seemed to assign to Campbell's.
Exactly.
Okay, let's game out some scenarios. What would a bullish outcome look like? What would actually surprise the market to the upside?
A truly bullish case would need, I think, an outperformance on both EPS and sales, not just one. And ideally, coupled with surprisingly strong forward guidance.
Where would that upside come from?
Maybe from better than expected margin control. Perhaps those cost-saving efforts are finally bearing significant fruit. Or maybe a highly successful pricing action that didn't dent sales volume as much as feared. Also, any real indication of relief in input costs or proof they can pass price hikes through effectively, that could definitely drive the stock higher.
Basically signs of sustained profitable growth, not just treading water.
That's what the bulls would want to see.
And conversely, the bearish scenario. What triggers a sell-off?
Well, an obvious miss on either the top or bottom line would do it, or even just meeting estimates but showing further margin contraction, that would be negative.
Margin compression is key.
Absolutely. And any warnings about accelerating commodity inflation or an inability to pass those costs on would be very poorly received. Also, negative commentary on demand trends or signs they're losing shelf space to competitors, especially those private labels we mentioned.
Yeah, weakness in core brands would be a major red flag.
Definitely.
So if you had to pick just one thing Beyond the headline, EPS and revenue, what's the absolute critical metric or piece of commentary you'll be watching most closely?
For me, without a doubt, it's gross margin and management's specific commentary around input cost trends and pricing power.
Gross margin. Why that above all else?
Because that's where the core operational battle is being fought for Campbell's right now. It tells you if their cost controls are working, if they're managing inflation effectively. A positive surprise on gross margin, even if revenue growth is just okay, could be viewed very favorably. It speaks directly to their efficiency.
Got it. Gross margin and the related commentary.
Okay.
Let's bring it all together then. What's the overall leaning for Campbell's Co. heading into this report?
Yeah.
Neutral, leaning one way or the other.
I'd say the overall leaning is firmly neutral. Consensus points to largely flat results, little directional bias, the current valuation, the sector positioning. It seems to cap both significant upside and downside, barring a really major surprise, probably on that margin front.
And if you had to give it a confidence score on predictability, like how likely are they to just deliver what's expected?
Predictability score, I'd probably say a 7 out of 10.
Pretty predictable then.
Yeah, it's a defensive name. Results tend to be steady, maybe a bit uninspiring, but they usually align pretty closely with estimates. It's a company that typically delivers on its promises, but those promises are usually about stability, not explosive growth.
Okay, so what does this mean for listeners? If someone's thinking about trading around Campbell's earnings, what's the takeaway?
Well, for more risk-averse listeners, it's probably best to just avoid holding Campbell's through the earnings event itself.
Because the potential reward might not justify the risk.
Exactly. Given the history of muted price reactions and the low implied volatility priced by options, the risk-reward for a quick directional bet just doesn't look particularly attractive.
Makes sense. What about more risk-tolerant folks? Any strategies there?
For those comfortable with options, one might consider strategies that bet on low volatility, things like a short straddle or strangle. These basically involve selling options to collect premium, and you profit if the stock moves less than that implied plus or minus 4%.
So you're betting on the stability continuing.
Precisely. Pure directional bets, long or short, seem less compelling here just because there aren't obvious, strong, fundamental catalysts pointing towards a major breakout in either direction.
That's a very clear strategic takeaway.
Yeah.
So wrapping up our look at Campbell's Co., what stands out most to you from this whole analysis?
For me, it really highlights how even with these seemingly stable, predictable companies, you have to look beyond the headlines. Understanding those nuances, like the constant pressure on gross margins from commodity costs, or why the stock doesn't always react strongly even to an earnings beat, that's where the real insight lies. It's not just about the big numbers.
Yeah, it's the story behind the numbers.
Exactly, and it raises a broader question, doesn't it?
Which is?
In a world flooded with information, how much should historical predictability actually influence your forward-looking decisions? Especially when management commentary or shifts in the broader market might start signaling a change, even for a company as seemingly steady as Campbell's.
That is a great question to think about. How much weight do you give the past versus signs of future change? Thank you for joining us for this look into Campbell's earnings. Hopefully this gives you a much clearer picture. Until next time, keep learning, keep questioning, and keep investing wisely.